It appears there is no end in sight as Nigeria's currency, the Naira, continues its downward slide against the dollar. Well, the scarcity of the dollar is compounding the depreciation, and the effect is already telling on the economy. Manufacturers, for example, are lamenting over the scarcity of dollars with which to import raw materials, and some say they have already shut down their production lines. They also warn that if urgent steps aren't taken, the dollar may sell for between 700 Naira and 1,000 Naira before the end of the year. To what extent do you believe this, going by what we are seeing now? The Naira has depreciated more than 25% in the past 1 year, and that is almost unprecedented when you look at it by comparison with previous years or previous decades. The last time that this happened was in 2016, and this was brought on, this was what triggered the recession that happened, and of course the scarcity of raw materials, scarcity of foreign exchange, and a number of other things that happened during that time. Eventually, I think one of the things that the CBN did at that time was to make interest rates for treasury bills very attractive to foreign investors so that they could invest in the Nigerian economy. Nobody expected COVID would happen last year. And by the time those treasury bills expired in 2019 and interest rates were brought down, those investors pulled their money back. COVID-19 happened, another recession, and that's what has brought us to where we are today. So it's a very, very big challenge. But I want to also speak to people who are speculating, because it's also quite a risky venture at this point, where the Naira has fallen so much. It came up to 570 last week. But now, with the interventions by the CBN, the federal government, getting loans in dollars and other things, and trying to attract foreign investors, it might actually fall and not climb to 700 like people are afraid of. Because if that happens, speculators are going to lose a lot of money.
BKO, do you believe that we haven't seen the worst of it, or that it could drop, that our Naira may just gain more value?
I do not see what is being done to stop the slide of the Naira. This CBN governor came in at a time when the Naira exchange for $1 at 165 Naira. And it's not been able to stop this slide. He came up with the idea of stopping the sale of dollars to BDCs. I would say that even from the first day, you shouldn't have been selling dollars to BDCs. The only way we can address this problem is if the gap between the unofficial rate and the official rate is closed. If you keep the gap as wide as it is now, the official rate is around 410, right, and the black market rate, yes, in the cost of last week, it came to 575 in some places. You go to Kano, it will sometimes be higher down, the rate here in Lagos. If you keep the gap this wide, it is an incentive for speculators. It is an incentive for people to hoard the currency so that they can now go and sell at the black market rate and make good money. Even Nigerians, he has tried all kinds of measures. The other day he said, if we are able to bring in, that for every dollar that you bring in, that's targeting the diasporan Nigerians, that for every dollar that you bring in, you get paid some Naira. Now, in spite of that, we didn't see a decline. Instead, we didn't see an improvement. Absolutely. Instead, the currency continued to decline. Mm-hmm. We are experiencing a downward trend, even in foreign direct investment. For the second quarter of this year, we were able to attract just $876 million, which is the lowest since the second quarter of 2016. That is a signal to us that the economy is going down. and this needs to be addressed. What I need to see concrete steps that the CBN is taking that can really address this problem. And if you keep the gap this wide, there won't be any solution. Remember, during the Yar'Adua era, it was 150 to $1. But at that time, the gap between official and unofficial was just about $10 to $15. And 10
Naira,
to 15 naira,
not this,
which is not a huge huge incentive to the speculator. What do we have now? This gap is so wide. It encourages you to keep. Now, people are not even talking about how much money Nigerians get bribed heavily. Some of them bribed in billions because they know the Naira has no value. They convert that bribe to dollars and keep in their houses because they know the dollar is consistent, so they keep it. That kind, somebody who did not really work for money, for a huge sum of money that they brought to him. Do you think, even if you tell him that it is 800 to $1, do you think he will worry? He didn't work for it.
He has them.
So
he has them stashed at
this
home.
exchange rate, our exchange rate is abnormal. A lot of it fueled by corruption. So people, they keep asking for this dollar. Look, the truth is that we have to tell ourselves so that the devil can be ashamed. Government agencies, they bribe National Assembly members and other people. When they bribe them in foreign currency. What are we talking about?
And yet we are saying it's
they bribe them in foreign currency. Before bribing them in foreign currency, what do? They convert the Naira to dollars and then go and bribe those greedy people.
All right, BKO. Well, let's invite the founder and managing director, Carry Asset Management Limited. Mr. Johnson Chukwu, it's good to have you on Journalist Hangout this Sunday. So what is, your appraisal of the situation? What is the justification, if any, for this yawning gap between the official forex rate or the dollar rate and what we see at the parallel markets?
Well, just like the last speaker said, we are dealing with a difficult situation. One of the core sources of foreign exchange in any economy is from the proceeds of sale of your export, or proceeds of your export sales. Unfortunately, if you look at our export sales, we are having a negative balance of trade. What that means is that because this what they call your operating cash flow for a country, the operating cash flow that boosts your reserve is from the proceeds of your exports. But if you look at our trade in the last quarter of this year, and as has happened in the past couple of quarters, we are importing more goods than we are exporting, or the value of our import is now more than what we export. What that means that at the end of every month, we have to dip our hand in our reserve to pay for our exports, for our imports. And as long as that is continuing, you are seeing a depletion in your reserve. And you cannot rely on borrowing to defend your currency, because even as Nigeria has assessed the Eurobond market, that is a one-off. It's not a flow. It just what you may call a stopgap. So if you say, okay, let's use it to defend the Naira, you will end up dissipating the whole amount we assessed in the Eurobond market, and you will still be in the same situation.
Yes.
So it's a very difficult challenge that the central bank is dealing with. The second issue is just what you mentioned. If you look at our capital importation in the second quarter of this year, total capital importation, that's total value of foreign capital that flew into our country, was only 876 billion, million, not billion, 876 million.
Yes.
Last quarter, first quarter of this year was 1.901 billion. So it reduced by more than 50%. That is the capital importation, which includes all foreign direct investment into the country. Unfortunately for us as a country, we're no longer attracting foreign direct investment into the country because we're dealing with so many endogenous constraining factors, issue of insecurity and what have you. So the total capital importation in the second quarter of this year was only 876 million. Of that amount, only 77 million came on a long-term basis. 77 million was what they call foreign direct investment. Those who have come to invest in our economy was only 77 million. The rest are flows that could go back, like 555 million that was foreign portfolio investment. So if you are not attracting people who are bringing money on a permanent basis, that foreign direct investment, and your export earnings are not up to your import earnings, then you are going to be dealing with the balance of trade and foreign exchange challenge, which the country has dealt with for a long time. And if you ask me what is the solution, it's not going to be a short-term solution. I will talk about the short-term, what we may call fact that could moderate the pressure, but in the long run, we have to expand our exports. If we don't expand our exports, we're going to deal with I was discussing with somebody earlier last week, and they told me that in 1980, that for you to go outside the country to import, you have to incentivize customs people to bring your dollar into the aircraft. And what that means, we have dealt with foreign exchange pressures from as far back as 1980. Prior to that, you remember we used to have what we call import license scheme. It was a way of rationing foreign exchange. So as long as we don't address the structure of the economy, which is diversifying our export earnings, we will not solve this problem. We will only have momentary relief if the price of crude goes up, or if our production gets to 2 million barrels a day, or maybe 1 or 2 million barrels a day.
But what about the CBN? What about the intervention of the CBN in all of this? You know, the gentlemen here, you know, have put their spotlight on the role of the CBN in alleviating or worsening the situation. Where do you stand?
Okay, let me tell you some of the things I think as it comes to the CBN, which I said they are dealing with a difficult situation. If you talk about alleviating the situation, one of the co-discussants had mentioned the issue of using yield on treasury bills to attract foreign capital flow into the economy, which was used to moderate the pressures then when interest rate on treasury bills went as high as 18%. But the question is that when you do that, the other unintended negative consequences of that. Today, the economy is in a difficult situation. Can you effectively increase interest rate to 18%? What will happen to the economy? The economy will go back into recession because nobody can borrow. But the other aspect where the central bank has a role to play is in the channel of distribution of the foreign exchange, or the method of allocation, as you may call it. Previously, I heard somebody talk about the BDCs. The challenge you have is that the BDCs were the informal, we're servicing the informal segment of the market, and we should not deny the fact that there are informal segments of the FX market that are genuine and that should be legitimate. I'll give you instances. Today, in the Nigerian economy, all hiring of vessels, I mean, I'm talking of ocean-going vessels, are done in dollars. We don't have refineries, so people who are taking petroleum products, even to Lagos, have to hire vessels. They buy dollar in the parallel market. So the central bank, as it comes to what the central bank should do, is to find a way of bringing in these legitimate demands that are in the parallel market into the official market. If you can bring in issues of freight on vessels and NPA charges, that the two of them alone account for more than 60% of the demand in the parallel market. If you take them into the official market and you create a fast track window that anybody who wants to hire a vessel can go to his bank and submit the invoice and get the bank to pay the shipping company, that will reduce the pressure and that will bring down the exchange rate at the parallel market, and obviously narrow the gap between the official rate and the parallel market. Yeah. And that segment, the central bank can also play a role in it. There are also traders, importers, whose import tickets or transaction tickets like $20,000, $10,000, they import from China, they import from Indonesia, they import from Vietnam, they import from India. They don't even travel out of the country. They just transfer money to their exporters, and those people will package and co-load their products with other goods coming to the country. These guys cannot wait at the CBN window, go and open from M and wait for 6 months to get $20,000 or $10,000, which is their import ticket. They go to the parallel market to buy these funds. You have to find a way of creating a retail window. That there's already a retail window, but that retail window is not meeting the demands of these people because they have time is of essence to them. If the central bank can do both, we're going to take off about 80% of the demand in the parallel market, and that will bring down the exchange at the parallel market. That's what I think the central bank are doing in the short term.
Now, let's talk about the CBN still. Are you convinced that it is truly enjoying monopoly? I mean, autonomy? Does it really have autonomy? Can the CBN governor take decisions without the interference of political players?
I think the law is very clear as it comes to the autonomy of the central bank and policy autonomy of the central bank. Ideally, the central bank governor can take any decision as it relates to monetary policies without going to consult anybody at the fiscal end or the executive of the government. But I'm also aware that in any society, any good society, there is always a handshake. There's always some interface, engagement between the executive arm of government and the monetary policy managers. The simple reason you don't want to run at cross purpose. Not necessarily because you need to take orders from the executive arm of government, but you are not going to come up with policies that will shock the economy. In as much as the objective of the monetary policies and the fiscal policies, we need to create employment, you need to grow the economy, you need to diversify the economy. If those objectives are common among the two managers of the economy, then it's necessary that they compare notes and not necessarily take order from each other, but compare notes and say this is what should work. Because I can tell you what happens in the environment. If, for instance, the Monetary Policy Committee decides to adopt an expansionary monetary policy, and the Fiscal Authority decides to adopt contractionary fiscal policies by creating, using the budget tools, what will happen at the decision of the Monetary Policy Committee to adopt an expansionary monetary policy will be neutralized by the action of the Fiscal Authority. So whatever is the objective of that intended action will be neutralized, will be eliminated, will not be achieved. Similarly, the Fiscal Authority could say we want to grow the economy, but to grow the economy, it has to come at the cost of inflation. So they say, okay, we're going to allow for a deficit budget, which will inject into the economy and lead to faster economic growth. And the Monetary Policy Committee, their primary objective of the Monetary Policy the Monetary Authority is actually to maintain price stability, which is to control inflation. Controlling inflation is one of them, because those are among the four prices that the monetary authorities have to control. And they decide, look, our priority number one is to control the inflation. So if to control the inflation, they have to contract money supply, increase interest rates at the time when the fiscal authority is injecting liquidity through a expansionary budget, that intention of the fiscal authority will be defeated by the actions of the monetary authority. That's why the two of them need to work together, not necessarily to take order from each other. I think it happens everywhere in the world. The president will normally call the Chancellor of Exchequer, as we call him, or the Federal Reserve Chairman, for conversations on how to manage the economy more effectively, not necessarily to give them orders. But as it relates to monetary policy decisions, the central bank is legally autonomous.
Mr. Chukwu, how much of a problem is it for you when you look at the level of regulation on the activities of airliners and shipping companies? You've established that there's a problem with proceeds from exports, but then these two groups, for example, are alleged not to be remitting as much as they are earning from export proceeds. How much of a problem is that for you, and how much of a solution would it be for you if these leakages are mopped up? Okay, let's look at the two segments, the two sectors you mentioned: the aviation sector and the shipping sector, subsectors. If you look at the aviation sector, Nigerian airlines are largely domestic operators. Apart from APs that has some international routes, which I think are largely inactive today. So it then means that they are not earning so much of foreign exchange from international routes. And what we are in terms of the aviation industry, we are net exporter of currency, or because we most of the airlines that actually ferry from the country to other countries are foreign airlines. So in that case, we can't be talking of remittances from those airlines, because BA or Lufthansa or whichever foreign airline will not start remitting funds to Nigeria because they are not domestic airlines. When we address the issue of routes that the airlines are taking and enforce to that Nigerian airlines have as many routes or as many destinations as foreign airlines, and those Nigerian airlines are strong enough to compete, that's when we'll be talking of, okay, they should make remittances locally back to the economy. The same thing applies in the cabotage.
most of the freight companies are not Nigerian companies. If you look at the major shipping companies, they are all foreign companies. And if you look at what the cargo that leaves the country and go outside the country, most of them are inward bound cargo, not outward bound cargo. So we do not have the shipping companies that are operating either in terms of even carrying of liquid cargo or solid cargo in form of containers. We don't have those shipping companies. So we still rely on foreign shipping companies. So when we talk of we're not getting remittances from those in the aviation industry and in the shipping industry, I wonder how we're going to have that if we don't have our local grown companies who are operating based on from Nigeria, who are flagged in Nigeria and actually taking cargoes from Nigeria to other countries and bringing cargoes to the country.
All right, Mr. Johnson Chukwu, we thank you very much for your contributions on Journalist Hangout, our Sunday edition. Best regards. Thanks again.
Thank you.